Hello and welcome to NIAGA Spotlight with me, Tamina Kausji. NIAGA Spotlight goes through the week in economic analysis and future affairs. Well, today on Future Affairs, we're looking at a very timely and interesting topic indeed, and a deep dive into the generational wealth revolution, as well as how millennials and Gen Z are redefining wealth. Now, a couple of data points before we embark on the topic. By 2045, a staggering 84 trillion USD will move from the hands of baby boomers to millennials and Gen X, and this is a massive generational transfer of wealth. Now, as millennials and Gen Z emerge as both creators as well as inheritors of wealth, this is shaping a completely different future from what the investment landscape has looked like over the past 50 or more years. So, the investment migration market, which is actually being led by millennial and Gen Z high net worth individuals, or HNWIs, is surging to over 21 billion USD annually. Younger generations are, of course, increasingly prioritizing foreign homes, sustainable investments, and this is also true across the wider Southeast Asian region, including Malaysia. NIAGA Spotlight today delves into a lot of the factors that are anchoring this generational shift of wealth, and I have the absolute pleasure of welcoming today in the studios to join us live Nirbhay Handa, who is co-founder and CEO of Multipolitan. Nirbhay, a very good morning. How are you doing?
I'm very well, Tamina. Thank you. Thank you so much for having me.
Fantastic. So let's get straight into the discussion. Now, let's talk about the shift in values among millennials and Gen Z and how it's actually influencing their approach to wealth transfer, something which Multipolitan has been tracking for a while now.
Thank you, Tamina. So Multipolitan is an immigration platform. We provide immigration opportunities to over 50 places globally.
Right.
A big part of our audience is high net worth individuals and affluent families. And as a result of that, it becomes very important for us to track private wealth trends, and hence why we've come up with this report. And we're speaking about this colossal wealth transfer that's taking place between baby boomers and millennials.
That's right, 84 trillion USD by 2045.
That's a huge number.
That is, and that is less than 3 decades away. While it may seem like numerically, all right, that's a little bit medium to long term, but you're seeing the shifts already occurring now, right?
No, absolutely. And I think if you look at how our fathers were investing and how we invest is starkly different, right? I think millennials, they have a higher risk appetite. They also feel barriers to real estate have increased over the years. So they prefer alternative assets in general, whether that's investing in high-risk equities or whether that's getting into digital assets. The entire crypto narrative is very close to millennials. And the other piece is, I think there's been a huge narrative around this democratization piece, right? Now, millennials as investors, they have access to fairly sophisticated information that back in the day was only kept with a few people. Right? And as a result of that, there has been an immense democratization with wealth generation as well, right?
Absolutely, because what we're talking about essentially when it comes to the democratization, would you say that what's been unleashed by the internet and access to information is the critical key component that differentiates millennials, Gen Z from parentals?
Yeah, absolutely. And you could see that because now we're seeing more first generation entrepreneurs than ever before.
That's right. Correct.
And as a result of that, millennials are also very focused on self-governance. So the rise in investment migration that you briefly touched upon, they want to transcend beyond the borders they're restricted to, right? They want to look at fiscally competitive landscapes where they can take their businesses. So as a result of that, millennials and particularly Gen Z, we find they're extremely transnational, very cosmopolitan.
So now investment migration, let's dig a little deeper into that, Nirbhay, because that's very interesting. And what it's showing is that it's become pretty fundamental amongst the shifts that we're seeing in an increasingly volatile world. Anyone who's around today still, we have lived through a once-in-a-lifetime, hopefully, pandemic, but that also shifted perspectives towards how younger HNWIs invest, right?
Yeah, I agree. And if you look at, what we say is, Tamina, the utility of an alternative residence is going to be a lot higher than you owning a car, right? And why I say that is if you look at the Global Peace Index, there are right now more than 56 conflicts going on.
True,
right?
active conflicts.
Active conflicts. So what's the point of speaking about investments or wealth preservation if you don't have the basic necessities of life, which is security? Right?
Absolutely.
And particularly, let's say if you're based in a place like Israel or you're based in a place like Lebanon, getting an alternative residence is not a need, it's a necessity. It's not a want, actually, it's a necessity, right? And that's why this is a topic which is really touching a lot of lives, and millennials are pursuing these opportunities aggressively than ever before. Right.
Well, that's very fascinating because at the same time, there are ways in which technology and digital platforms are enabling both millennials as well as Gen Z. Let's talk about the role of fintech, of financial technology, and how you have seen it radically shift from something which was handy to have to something which is actually playing a crucial part in how the younger generation is investing.
You know, this is really the touch screen generation, as we call it, right? I think we're in an era of vibrancy and vitality, right? The wealth management landscape drastically needs to change from boring forms to something which is more interactive. And I think we've seen legacy institutions sort of gamifying this industry to a great measure to capture engagement from younger audiences. Right, and I think we see that happening. You know, for example, Citi has its Velocity app. Goldman Sachs just recently announced they're launching their proprietary digital asset trading platform in the wake of right around the news when Trump got elected, because that's very positive for particularly the digital asset landscape.
Understood. Given the very bullish approach that potentially the future administration is going to have towards cryptocurrency.
Yeah, absolutely. And I think going back to the same narrative of transparency and democratization, I think millennials and Gen Z, they want to eradicate intermediaries, and that's why there's a big digital asset revolution, right? So a lot of these apps are built on smart contracts and Ethereum, right? Which really eradicates any intermediaries that are involved in a lot of these protocols. Also lending and staking, which is, gaining interest on the investments that you're holding within the digital asset space, have become really popular, particularly with millennials and Gen Z.
That's right. And that is actually pointing towards a lot greater access to personalized as well as transparent wealth management. Is that making, as you said, investors who are younger even bolder in what they're exploring with regards to fintech? Absolutely.
I think the risk appetite has drastically increased, but at the same time, we see there's a big trend on ensuring profits come with progress, right? So we've seen the ESG narrative really pick up amongst millennials and Gen Z. They want to ensure the investments they're making, their values are aligned with it. And, we can see that with examples like Patagonia, right? The brands have become really mainstream with millennials and Gen Z. But also if you look at big businesses, for example, Salesforce and Microsoft, they're really big on diversity and inclusion. Right, green bonds is the new buzzword. Apple issued $4.5 billion green bonds. Similarly, Google had a sustainability bond that they issued. So I think these narratives are very close to millennials, and they want to ensure that their investments, there is a purpose around it, and it's aligned with their personal values, Hemina.
Exactly. So personal values are also intersecting with faster and more efficient wealth growth through a lot of these alternative investments. What about robo-advisors, for example? Are you also seeing that as part of a wider continuing trend, or is it just flash in the pan?
No, I think it's gonna really be a continuing trend, because what robo-advisors do is they give you actionable insights on fundamental and technical analysis, which is an expensive affair if you're working with a financial advisor.
Absolutely.
Right? So I think the barriers to entry when it comes to trading are reduced drastically with robo-advisory coming in. Right? But again, at the same time, you have to be mindful and do enhanced due diligence on what you're buying. Right? So I think that's where education becomes quite critical, guiding millennials and the younger generation in terms of how to ensure there's longevity to this wealth that they have or they're generating.
Exactly. So that brings me to another dimension, which in finance, of course, it is often seen as a special interest sector. But given Multipolitan's experience and expertise in looking across various financial markets to collate your data, let's talk about the role that women, especially millennial as well as Gen Z women, are playing as active investors and high net worth individuals, because that's something which has also radically shifted from one or even two generations ago, right? We primarily saw, as we could quite easily say, our fathers were the ones investing. Now it's not necessarily only them, right?
And I think you could probably respond to that question much better than me, at the back of the conversation that we had. But I think, there's a study by McKinsey which says ensuring there's diverse leadership financially these teams tend to perform 35% better.
That's correct.
Right.
Yep.
And I think diversity has become a critical aspect of how the world is shaping around us. Right. I'm certain you've seen the new Jaguar branding, which came out
That's correct. Yep.
recently. Right.
Caused quite a furore.
Yeah. And I think, and coming back to the same point that we discussed earlier, the new age of investors, they really want to be aligned to where their money is going from a values perspective. Right, and gender empowerment, women in leadership is an extremely crucial and important topic that millennials and Gen Zs are impacted by.
Yeah, so also perhaps the companies which they choose to invest in or the stockholder options which they have could actually be impacted by this.
Yeah, most definitely. Right.
All right.
And you've seen the appointment of Lena Nair as the CEO of Chanel.
That's right.
And Chanel, obviously, as a brand, has had a lot of mystique over the years. But she coming out and speaking openly with the gravitas that she has obviously driven a lot of engagement for Chanel. So women in leadership become iconic at the end of the day, right?
Exactly.
And they attract a lot of interest around what they do.
Exactly. So that also shifts the focus into what companies and high net worth stock market options actually are. It's actually being shifted I think year on year, not so much generationally. Let's look at the prioritization of ESG compliant investments, green and impact investing.
Yeah.
What are some interesting trends or insights that you have noticed, particularly with regards to the more and more present impacts of climate change?
Yeah, I think we're growing up in a generation, Tehmina, we hear about climate change all the time, right?
That's right. Or we, drive through floods perhaps, occasionally, right?
Yeah, and climate change is impacting lives in a significant way. And I think it's also one of the big triggers for investment migration. There are countries which are suffering at the back of climate change, and there's a real need for people to actually move because of it, right? But coming back to your question, I think there's a huge narrative around the ESG piece, right? As we spoke about the green bonds that Apple has issued, this entire narrative is really, really picking up.
Yeah, we're also actually seeing non-ESG compliant assets. They are being increasingly reallocated into ESG-focused funds.
Yeah.
So there is a clear shift within companies themselves as well to be conscious so that they can actually appeal to a different type of investor. Let's move from there, Nirbhay, to talking a little bit about shareholder advocacy and active ownership. What is that landscape looking like, particularly now because the average age of majoritarian shareholders is now dropping into the millennial generation and maybe even Gen Z?
Yeah, we've seen that particularly in ExxonMobil, right? There was level of shareholder activism around making the company more climate forward, right? And we see that increasingly within family offices as well at the Hemina. They've now become centers of innovation. So if an heir is really keen on investments within the ESG space, there are times when family offices would provide private equity capital or venture capital to fund those companies.
Right.
Right. So that is a trend that we're seeing really, really take over, right? Where the new generation gets involved with the older generation and then can redirect investments in terms of where they're going, right? Whether that's within the ESG space, whether that's within the climate tech space, right? Which is again a very hot area where a lot of investments are going at this stage, Tehmina.
Exactly, those 3 Ps, right? People, purpose, and planet. But I think we're seeing it actionably roll out when it comes to where people are choosing to put their money. Right. Let's talk a little bit around the space whereby HNWIs, high net worth individuals, are actually shifting specifically to relocating and also to buying property that is overseas. The Southeast Asian market, Malaysia in particular, even Singapore, etc. But perhaps Malaysia to a larger extent due to our wider geography and land availability can be a very attractive market for this.
Absolutely. I think Malaysia is very habitable. There are great schools for families, with young children to be here. Having said that, a big part of bringing people to a country is a lot about creating incentives for them to being there, right? And I think Dubai has done that very well. For example, with their golden visa scheme, the ease of getting golden visa it's quite straightforward, right? For example, I have a golden visa. By virtue of having a Dubai golden visa, I ended up opening a bank account in UAE, right?
Sure. So it just eases the entire ecosystem.
It just eases the entire
for
ecosystem,
finances.
and obviously, Dubai positions itself as a really competitive fiscal landscape, right, from a taxation perspective. So I think Malaysia has a great opportunity, right? At the end of the day, we're walking into an era where countries are going to start competing for talent.
Absolutely.
Right? And Malaysia needs to be on forefront of that. And I think they've done that with the MTEP, the Malaysia Tech Entrepreneur Pass, right? But very important with these things is, are you marketing these opportunities globally to investors?
Very true. It
Right.
shouldn't have to be something that you have to hustle to find or know someone locally necessarily.
Yeah.
This should be open to a global audience,
Yeah.
preferably online, right?
Absolutely, and I think that's where Multipolitan comes in, and that's the business that we're really in, ensuring that entrepreneurs, they get access to places where it's easier for them to build their companies, which are fiscally robust, where they can hire foreign talent and create competitive businesses.
Absolutely. Now, speaking of competitive businesses, another arena which is of great interest to HNWIs
Yeah.
is particularly emerging markets, specifically the wellness sector. Let's
Yeah.
talk about what movements and shifts that you're seeing in it, which is actually quite related to the current global landscape.
Yeah, I was just noticing if you're wearing a Fitbit or a Whoop, because I
Right.
think the wearable health industry has really taken
Sure.
over, right? I think if you look at just the valuation of apps like Noom, Calm, Headspace, it's in billions of dollars, right? So I think health is an asset class, right? You cannot create wealth without health.
Very
Right?
true.
And,
Absolutely.
And particularly within this wealth report, we've had a lot of commentaries on preventive medicine, longevity, right, and mental health. How it's so critical for entrepreneurs to look after these three areas, if they want to be building compelling businesses for the future.
Absolutely.
Right? So this is an industry which is very close to the hearts of millennials.
So it definitely makes sense because with longevity, of course, then comes the opportunity to further expand these industries.
Yeah.
Just as a point of interest, I wonder whether nearby there was some trend that quite radically shifted in favor of wellness due to the impacts, the knock-on impacts of the pandemic.
Yeah, I think it's very likely, right? I think people had more time in their hands.
Sure.
And at the same time, a lot of people were impacted by the pandemic, whether that's them losing jobs, right? So usually great things come out of an adversity, right?
That's right.
That's usually the trend. And at the back of pandemic, people became more self-aware around these things, around mental health, around looking after themselves, right? And I think these trends have really, really picked up, particularly after the pandemic.
Absolutely, because what it's actually pointing towards is that if people were interested then,
Yeah.
it's not so much that it's going to decline as a market, but it's
Yeah.
only going to reinvigorate an existing interest.
Yeah, absolutely. And I think people have become really cautious in terms of what they're consuming. Personally, I find myself reading ingredients that I never did. Right?
Sure, something
so-
perhaps we may not have done about 5-10 years ago, right?
Yeah, absolutely. And I think we're seeing that change take place.
That's right.
And it's a change which is for the good.
Yeah, it is a change after all, for the good. So let's talk about another very interesting dimension of this entire conversation of
Yeah.
generational wealth transfer. So once again, USD 84 trillion by 2045.
Yeah.
Now, how exactly are legacy financial institutions adapting to, of course, the challenges and the newer demands of
Yeah.
millennial and Gen Z investors?
They really have to innovate, right? So we've seen Bank of Montreal roll out Smartfolio. We've seen Goldman Sachs looking at this digital proprietary platform that they're rolling out, right? We've seen banks like Julius Baer backing banks like SEBA, which specializes in digital assets.
That's right.
So we really do see legacy institutions getting into this space because this is really the next frontier, right? The second piece, as I said, it's about vitality and vibrancy. So can you make these concepts engaging for an audience that is the touch screen generation, right?
Very true.
Gamifying.
Converting the formats.
Yeah, converting the format. And I think if you just look at these trading apps, they're extremely colorful, they're very engaging, right? And the entire process has become so much more fun than you trading stocks back in the day, right?
Very true.
So I think gamification is going to play a big role when it comes to helping legacy institutions reaching out to a younger audience, right?
It also sounds like an interesting opportunity, and correct me if you've already actually seen it happening in person, but further personalization of wealth investment and also building of direct relationships rather than financial and wealth management institutions being a little more distant and removed.
Absolutely, and I think coming back to that point, Hamina, we're seeing these large institutions creating next-gen programs, where they bring the heirs of family wealth into a room and they discuss in terms of how do you create longevity around your wealth preservation. So I think education has also become quite critical, particularly within the private banking sector, and ensuring there's engagement with the younger generation.
Actually ensuring that they are not going to migrate away from the traditional wealth management institutions, right?
Yeah, and they're not going to migrate away, also helping them realize the importance of convention.
Right. And perhaps hybrid models actually moving forward.
Exactly, right? So you can not completely radically move away from how investments have been done for so many years and where they're allocated. So just getting the right balance of it is where there's a lot of education required, right? So you never go 80% into your digital asset portfolio, right? You need to be conservative, keep it around 5 to 10% of your overall net assets. So I think these things are quite critical, and I think a lot of these large institutions are building these next-gen programs which are engaging a younger audience.
Exactly, because it's all about giving them sufficient options when it comes to investment choices as well. Yeah. Right. So to move around and close out the discussion, actually, I'd actually like to talk about perhaps some models of collaboration which are actually emerging, because as we previously touched on briefly, the Gen Z and the millennials are the ones who are actually in charge of most family offices these days, and they are being run to a completely different sort of a model from just about 2-3 decades ago.
Yeah, I think we've seen the rise of multi-family offices, right, where you can pool resources, right, and move in a certain direction. Right, so that's happening. The other piece is, as I said, family offices are now really the centers of innovation, right? They want to engage with the heir of this wealth and what are his interests. The other piece is we're also seeing technology and philanthropy converge within the family office space. So I think a good example is the family office of Mark Zuckerberg and Priscilla Chan. They're actually producing software for philanthropy, right, for their partners. So we're seeing a lot of development, and I think even family offices, while you have these large institutions, the Goldman Sachs, the JP Morgan, they're moving towards digitization. We're also seeing family offices using technology to ensure people that they're catering to, they really understand where their portfolio is.
Exactly. So that actually is pointing nearby to an increased demand for transparency and also real-time data access. So does this bring about more opportunities for the wealth management sector?
Yeah.
Or is it more about the existing players are already capitalizing on it?
See, this is what we call as productization, right? So what productization does is it gives you scalability. Right? So I think now these services can be scaled to a much bigger extent than they could be in the past.
Sure.
Right? Because now you've built these interfaces which gives you access to the information that you're looking for. And multifamily offices are doing that, and they have to do it because they're not just dealing with one family, they're dealing with multiple families.
Exactly. So dealing with multiple families then also brings about one last really wider question. Let's look at and shift back the focus a little to something that we mentioned earlier as a huge market of growth. What about balancing risk and opportunity when it comes to the wide arena of, cryptocurrency, especially digital assets, and how that is not yet a fully legislated arena, but at the same time, you do see so much of interest around it.
Yeah, I think regulatory concerns still remain across the world around digital assets, right? It's improving. Particularly countries like Dubai and Singapore are really on the forefront of it. The other piece is cybersecurity is a major threat, how your assets are held. Right. The other piece is the encryption. Are you able to ensure that your keys are kept safe for these digital assets that you're holding? There's also a big gap around estate planning for your digital assets, and I think that's an area where there needs to be a lot of innovation that needs to take place. Right. So my advice to families or heirs of wealth is to really work closely with lawyers who understand the digital asset landscape, particularly around the estate planning piece.
Exactly.
Right.
And I think it's a very interesting intersection because right now, whenever you mention digital assets, digital planning, it also brings about the inevitable role of AI. So AI and ethics and how that actually applies to individuals who are heavily investing in this arena,
Yeah.
and whether or not they are able to ensure that they get back the returns, right?
Yeah. Yeah, I think AI has had far-reaching benefits, particularly because it can now generate actionable insights on what you need to do, particularly when it comes to your investments, right? But there's still you need the fine balance of taking actionable insights from an AI protocol and somebody who's seen multiple macro cycles and is very experienced in terms of how investments are managed, right? So I think a good balance of that, particularly for large ticket size investments, is quite critical.
Exactly. So in conclusion, Nirbhay, what would you say the year ahead, not 2024 since we're towards the cresting end of it, but how is 2025 looking like when it comes to wealth management, particularly for millennial and Gen Z investors?
I think a couple of points, Tamina. So I think first there is a huge demand for alternative residencies because people have become transnational. There's no point speaking about investments if you cannot ensure there's longevity to those investments, right?
True.
And the first step is to be part of countries where you can preserve your wealth, right? And that's quite critical for people in emerging and developing parts of the world or where there's a conflict. The second piece is obviously digitization. Vibrancy and vitality is critical for engaging a younger audience, ensuring they're using these protocols that the banks are developing. So I think that would be the second piece. The third is we are indeed moving towards a world where investments really need to be aligned with your personal values. So ensuring that we're following that, right, is something to watch out for. And the final piece is the entire concept of sovereignty is going to be challenged because now you have corporations with bigger market cap than GDPs of different countries.
That's right, exactly.
Saudi Aramco would probably have a market cap of more than Brazil, right? So are we prepared for an era where sovereignty looks very different, right? I believe there's going to be rise of network states. There's going to be rise of e-governance, right? And it's very likely that you and I were growing up in an era where an NFT was sold for $670 million. So it's very likely that there will be alternative residencies in the metaverse that people would be exploring, right? There could be blockchain in general is a place. That's what people call it.
Correct. A place indeed.
It is a place indeed. So I think these would be the key trends to really watch out for. My personal favorite out of these would be the network states and how they develop.
Fantastic.
Yeah.
Nirbhay, thank you for such an interesting conversation that I think anchors around the fact that as the world gets increasingly borderless, investments, however, appear to be increasingly grounded in grassroots interests. Thanks very much.
Thank you, Davina. Thank you.
Fantastic. Well, that's all we have time for today on NIAGA Spotlight, featuring a very insightful discussion around the generational transfer of wealth. I'm Tamina Kowski signing off for now. Here's to a productive week ahead.